Whether you're new to it or a pro, shopping for a car can be fun and rough. Learning from and analyzing how people do it, I see that among the things to work through, like negotiating the price, monthly loan payment, the loan interest rate, and the length of the whole process, there's one thing we have greater control on to save on buying and owning a car, and that is how fast we pay off the loan. Compared to what people usually do, paying it off 2 years faster means you could save $1,000 to own the car. Let's analyze. Let's imagine you're buying a $25,000 car. Our analysis works for $20,000 car or even below that, or even much higher than that. And considering it's April 2022, a lot of people are experiencing inflation. Some of you might be thinking, hey, it would be nice to get a more fuel efficient car or maybe even a hybrid or electric vehicle. So for our analysis, let's assume we're going to look at a $25,000 car. This happens to be a Mazda CX-5. Here we have two scenarios, the usual scenario, let's call it, or the okay scenario, and then the better scenario. And the only thing we're going to change is the length of the loan term. Or even if, let's say, in this case, 6, meaning 6 years, even if the loan term is 6 years, and you were shopping around and you got it down to, you agreed to get it down to a loan term of 5 years, and what you actually did is you paid it off in 4 years, this can still mean that you save a lot more money. Okay, either way, let's look at the scenario. So let's assume that you put a down payment of $3,000 on that $25,000 car, which leaves you with the amount to get on a loan as $22,000. So notice it's the same for the okay and better scenarios. Let's assume that since we're going through inflation right now, it's April 2022, interest rates are not so great for a lot of people. So let's assume something a little crazy like 6% annual interest on the loan. And this is standard, that's just 12 months in a year. T is the loan term, which is the number of years. So for most of you, this is easy stuff, like common stuff. Now, to some people, they might want to use a calculator online, which you can find to try and estimate the monthly loan payment that you would get. And here I've baked in or hard-coded the variables that go into the formula, and we cover the formula in another video. So it basically uses everything from those variables A, R, N to T to give you the monthly loan payment. All right, so as you can see in the okay scenario, we see a monthly loan payment of $365 a month. Whereas in the better scenario, here better meaning, well, we'll see that it's better, but for now, we'll see that, okay, suppose you agreed to a loan term of 4 years. So instead of 6 years, 4 years, meaning you're going to pay off the loan faster. Is that better? And we'll see it's better. But initially, you'll see that, okay, that means you're going to have to pay more per month. In this case, $152 extra per month. But if you look at the total amount paid to pay off the loan and thus own the car, so this is saying, okay, let me take my monthly loan payment times 6 years times 12 months, then we get $26,251. Okay, compared to the better scenario where, all right, you're paying off, you have monthly payments that are $152 higher, but you are making a total loan payment of less, like a lower total loan payment, and that's $24,800. So ultimately, you could see that in the okay scenario, compared to the better scenario, you would be paying less in total to own the car. You could see that the total amount paid to own the car, which is again, down payment plus total paid for the loan, we see it's $27,800. And you could see an appreciable difference. Like, wow, in this case, not only are you, I mean, you're saving well over $1,000 to buy and own this car. You'd be saving basically $1,400 in total. So not only would you be owning the car faster. But because of those 2 years saved, going from, instead of paying the loan off in 6 years, you're paying it in 4 years, which yields a savings of $1,400. You can think about that as, well, I'd be saving about $726 per year for those 2 years. And that's amazing. Another thing to think about is when you are shopping for a car loan, whether it's at the financing department at a dealer or at a bank or a credit union by yourself, which means you could likely get better interest rates. This is just a simplified analysis where, again, the only thing that changed was the loan term. So 6 years versus 4 years. However, it's usually the case, as I bet some of you know, that if you're going to pay it off, or if you're going to agree to a shorter loan term, then that likely means you're going to get, well, virtually, it basically means you're going to get a lower interest rate, which is great. So a more realistic example here, a more realistic scenario would be that in the better situation, you would experience being offered or being approved for like a 5%, basically 1 percentage point less, or even 2 percentage points less. And that would totally increase your savings on buying and thus owning the car. All right, so overall, the strategy when it comes to buying for major things, in this case, a car, are to aim for a lower interest rate. Now, that's assuming you're not going to be able to pay off the car with cash. So like many other people, you get a car loan, right? So in this case, get a lower interest rate. So you could shop around maybe at a bank or a credit union and get something much less. But then even if you don't do all that effort, because time is money and it takes a lot of effort sometimes to be able to shop around, although these days really no excuse. You could just even go online and shop around. So besides shopping for a car loan with a much lower interest rate that you could get, say, conveniently at the dealer financing department, what you could do, and as we saw in this analysis, is that you can and should pay the loan off faster. Now, even if, let's say, you're on a car loan right now, you have one, you're paying for it, monthly payment is okay, and you might be wondering, well, okay, is there anything I could do right now? I'm already paying a car loan, and the answer is maybe. Meaning, what you should do, as some of you might know, is you should first talk with your loan provider and ask that, hey, if I make greater monthly payments, can I be, will that extra payment, however much payment, is extra above the minimum payment for the monthly loan payment, whatever extra amount you're paying, get assurance that that can be applied to the principal, not just the interest on the loan. So probably basic to some of you. So yeah, pay the loan off faster means, as we've seen, a savings of over $1,000. Okay, let me know if that was helpful. In other videos, we'll cover smart shopping and spending topics from car maintenance to sneakers.